Hello, I'm Kevin Flynn, and welcome to another edition of Avalon's Market Minute for September 29th, 2013. Markets fell last week, bringing a three-week winning streak to a close, and given the S&P its worst losing streak in some time, down a bit more than 1% for the week, 2% since the day after the Fed meeting, so the damage has been limited. The decline look set to stretch further, though, Monday on the growing prospects of a government shutdown. So what about that shutdown? Well, given the history we've had with this series of governmental mini-dramas, it's perhaps not surprising that Wall Street really didn't start to take the idea of a shutdown seriously until Friday, after the House of Representatives had passed a bill that everyone knew would be dead on arrival in the Senate. As we head into Monday's open, the chances of at least a temporary shutdown lasting a day or two appear to have become much more substantial. Don't take anything for granted. I'm not going to tell you what should happen because despite the appearances, everything is still possible. The House Republicans might blink. President Obama might blink. Maybe they both will, maybe neither will. One thing I've learned over the years is that policy decisions in tense situations are impossible to predict. I was preaching this gospel before the Federal Reserve's last meeting 10 days ago, and I'm sticking with it now. This could present an agonizing dilemma for traders on Monday. Tuesday's the first day of the month, the traditional buying day. If an 11th hour compromise is reached late Monday night, then the Tuesday move would be very big. If it isn't, then we might get a sell-off instead, and anyone loaded up for that relief rally would regret it. We could get a deal Monday afternoon, or we could get an additional dose of major anxiety. And that's going to be the situation in a nutshell until the situation gets resolved. Almost any quick deal that just kicks the can down the road for 2 or 3 months would set off a relief rally, but both sides could dig in until the weekend, maybe to test each other's nerves and assess who's more likely to get the blame. Or maybe we get a mini resolution to fund the government for some short period, a day, a week, who knows, so we can do it all over again. Behind this tussle lurks the debt limit battle, and up until now the thinking was that was going to be the tougher battle. Well, obviously, if either confrontation goes really badly, it'll be bad for the markets. But if they both get the usual last-minute resolution, then we both get big relief rallies that take us to new highs. What does this all have to do with the economy and earnings? Well, unless the battle turns disastrous, nothing. How much sense does it make? I'll leave that one for you to answer. I'm Kevin Flynn, and thanks for listening to another edition of Avalon's Market Minute.